Hello and welcome to another update video about silver. Yeah, on the silver chart, we've seen, I think, just a slightly higher high after the last video, but essentially that doesn't change our idea that silver is in, well, a bullish structure. It actually rather confirmed it because the price has formed an even clearer five-wave pattern to the upside now. So let's talk about the structure here. It's very, very similar to the gold structure. This silver chart here, and yeah, we still have the perspective that a wave 2 correction here bottomed. That was here on the 14th of February. Then we had a wave 1 to the upside, wave 2 to the downside, wave 3 to the upside, probably topped here. Yeah, probably topped here. That was on the 15th of March at around $25.40. Fourth wave pullback, and then a fifth wave to the upside. That would be the preferred interpretation, that we basically started now this wave 2 to the downside. I have slightly adjusted the support region. We haven't reached it yet. And the wave 2 should ideally form as an A, B, C structure, in which the initial move down is just the A wave. This here is now a B wave corrective rally possibly, which could extend a bit. And then we can still see a C wave to the downside. What would be the standard resistance area for the B wave? Normally we say it's the 50% Fibonacci retracement to the 78.6 Fibonacci retracement. And that's in this case between $25.07 and $25.46. It's just standard resistance. A B wave can easily overshoot that slightly, or could be extremely shallow. That's what B waves do. But sort of if we talk about standard resistance, that's this area with an additional level in between, which is the golden ratio level, 61.8 Fibonacci level at $25.23. So yeah, what do we do now? I mean, we have 5 waves to the upside. It's possible that this constituted a wave 1, basically the first wave of this uptrend. Yeah? Then we have a wave 2, which is unfolding now, which should form a 3-wave corrective pullback. The support region is defined between $22.69 and $24.22, with additional levels in between at $23.76 and $23.32. So as long as we're holding $22.69, I'm looking at higher prices. That might even include one more high in wave 1. So that would be the alternative that I'm also watching on the gold chart. But preferred interpretation is that we're now in this wave 2. So the idea is, yeah, we could go a little higher, but that might only be the B wave and then come down in wave C. So, and then now this is the preferred scenario. Basically, that means we're probably going to spend a little bit more time in that correction until wave 2 is complete. The entire ABC structure is complete. And as soon as that's the case, the third wave rally to the upside should really unfold. Now that's the preferred interpretation, the preferred scenario. There is an alternative scenario in which wave 1 is basically still extending. How does that work? In the alternative scenario, yep, this was a wave 1, this was a wave 2, but the entire move up was a, oh no, 1 second. This would be 3, 4, 5. The count is actually the same. The third wave ends where the third wave ends, but the fourth wave is basically still unfolding and could be close to an end. That the idea would be that this fourth wave unfolded as a flat structure. And in the case of silver, it would be an expanded flat in which we had, and I will show you that in detail, and then also zoom in a little bit, in which the, let me shift where the third wave should be. Yeah, in which the move down was just the A wave, then an overshooting B wave, and the C wave down followed then. Yeah, this is sort of the idea that I have here about the chart, but that would only be the alternative, okay? Only the alternative, and in that case we would still see one more high, however, in wave 5. Okay, so when, however, would this scenario be invalidated or become far less likely? Well, it would be if we get a break below the 50% Fibonacci level of the third wave, and that is at $22.81. So $23.81. If we get a break below $23.81, then it can't really be a wave 4 anymore. But to be honest, that's quite far away anyway. I would say, because that's by that time we will have entered the yellow support zone. So the 38.2 fib level is 24.20. So I would rather say as soon as we go below the $24.20 level, and as soon as we've entered the yellow support zone, I would take the white count off the chart. You know? Essentially, they are both bullish, however. They're basically both the same thesis, just two different, slightly different ways of how the waves subdivide. So that should give you all the parameters you need. Hope you liked the update about silver. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.